Right. Hi, everyone. Welcome to today's live analysis session brought to you by IC Markets. Right, uh, as we approach New Year's Eve, right, this is the last few hours of trading, right? Um, so it's going to be pretty quiet as well. So before we start today's webinar, just take note of the disclaimer as well. Right, this is marketing communication and does not contain and should not be construed as containing investment advice or an investment recommendation or an offer of or solicitation for the transactions in financial instruments. Also, take note of the risk warning that comes with trading forex and CFDs, as they carry a high level of risk to your capital, and you should only trade with money you can afford to lose. Right. My name is Ketan Rameshchandra. So this webinar series is brought to you in a special partnership between IC Markets and Everest Fortune Group, where we have been the finalists for Best FX and Equity Research for the following years, 2019, 2020, and 2021. Right. So as I mentioned earlier, right, with today being Monday, 30th of December, and tomorrow, 31st, New Year's Eve, right? Most major financial markets are going to have an early close, or they're going to be completely closed as well. So, for example, in Europe, German banks, Swiss banks, Italian banks are all going to be closed. During the Asia session, Korean and South Korean and Japanese banks will be closed as well, and many other major banks such as Australia, New Zealand, France, Australia, the UK are all going to have an early close as well. So trading activity is very likely going to be very thin as well. Trading volumes will be very thin, and activity is likely to be muted as well. Right, hi Jamili, good to see you as well. But nevertheless, there may be still some opportunities for those who wish to continue to trade over this period. All right, so with that, now let's dive into the charts trading view and begin the analysis on the dollar index. Right, and of course, if you have any requests for any other instruments, please do let me know. Right, do drop your requests in early in the chat box so we can have time to go through the analysis together. All right, so as expected, right, since Christmas, right, trading activity has been muted, volume has been thin as well, right? So with the dollar index hitting a high of 108.57 on Friday, 20th of December, it dropped down as low as 107.57 and has been hovering around the 108 level so far, right? So you can see here trading activity has come down, right? Has dropped off quite significantly, right? And dollar index is ranging between the pivot and the first resistance, right? The first resistance is quite clear as a swing high resistance that has taken place on Friday, 20th of December. And of course, the pivot is identified as a pullback support at 107.49. Previously, this level was a swing high resistance, functioned as a swing high resistance on 25th of November, and now could potentially function as a pullback support. It is also accompanied by a Fibonacci retracement at 38.2%. Right, how did we find this 38.2% retracement? We started it by running from this swing low on 6th of December, going up to the high of 20th of December, and we can see that the 38.2% retracement sits just underneath the pivot, and the 61.8% retracement aligns very well with the first support that's at 106.58. This level has been identified as an overlap support. Right, we see this level previously functioning as support on 26th of November and then resistance in the first week of December. So this creates an overlap level, which we have identified as the first support and is also accompanied by Fibonacci retracement at 61.8%. Right, hi Jamilu, yes, definitely we'll be covering the majors as well. So we'll be covering pound, gold, dollar, franc. Yep, definitely we move our way down, work our way down the major currency pairs, touching the commodities and the indices as well. All right, yeah, definitely we'll cover the pound, gold, and dollar, franc. Right, so these are the key levels here for the dollar index, right? So from now till probably the first or second trading day of 2025, right, we can probably expect trading activity to be sort of muted, and we can expect dollar index to definitely hover above the pivot level, which is at 107.50. Right, moving over down to the pound, right, we can see pound as well, right, after dropping down as low as 1.2465, right, dropping under $1, dropping under 125 on Friday, 20th of December. We can see that it's sort of range or constrained within this box here, right? Sort of sideways action that we see here, right? Ranging between 1.2480 on the lower bound and about 1.2620 on the upper bound here, right? So the pivot has been identified as a pullback resistance, which is at 1.2614. It is also accompanied by Fibonacci retracement at 38.2%. Right, so you can see here this retracement level was found starting from this swing high on 6th of December, going down to the low of Friday, 20th of December. We can see that the 38.2% retracement aligns pretty well with the pullback resistance level. Right, and higher up, there's a nice overlap level at 1.2729. This is also accompanied by Fibonacci retracement at 78.6%. Right, and of course support for the pound is at 1.2486. This is a multi-swing low support that's been in place since 22nd of November. Right, so you can see here this currency pair continues to trade in a prolonged downtrend, right? Especially when you look at it with the Ichimoku cloud, this currency pair continues to trade underneath the red Ichimoku cloud, which highlights the ongoing bearish momentum. Right, there's also maybe a nice descending trend line that we can draw as well. As the first descending trend line that we can draw is over here, and we can see several touches on this descending trend line. So the intersection of the pivot and the descending trend line helps us identify the first major resistance barrier, and this area is also accompanied by Fibonacci retracement at 38.2%. Now let's see if there's another retracement, a descending trend line that we can draw on a higher time frame. Right, there's probably another one here as well. Right, this is also another good descending trend line that begins from this swing high resistance on 26th of September. Right, so you can see very clearly, right, pound continues to trade underneath the red Ichimoku cloud, highlighting the ongoing bearish momentum, whereas for the dollar index we can see it's clearly trading above the green Ichimoku cloud which highlights the ongoing bullish momentum. Right, so very easy to identify the trend by using the Ichimoku cloud. Right, but for now, right, we see the cable being restrained underneath the pivot and the descending trend line. All right, so next up, dollar franc. Right, we'll take a look at dollar franc, then we'll take a look at the euro, and of course dollar yen as well. Then we'll move on over to the commodities. Right, so dollar franc has risen very sharply since 30th of September. Right, we can see this currency pair going from trough to peak of today, right, gaining nearly 8% over this period. Right, dollar franc has been rising strongly, and demand for the franc has weakened significantly as the Swiss National Bank has made several aggressive rate cuts already this year. Right, I think they've made 3 consecutive rate cuts, and that has weakened the franc significantly, causing dollar franc to rise up and breach 90 cents. Right, we can see here it breached 90 cents briefly on Wednesday, 18th of December, dropped back, pulled back quite sharply over the next few days, but it reversed and rallied strongly to break above this level once more. Right, so and also at the same time, of course, we can see dollar franc continuing to trade above the green Ichimoku cloud as well, highlighting the ongoing bullish momentum. Now, it is trading very close to what I see is a swing high resistance that has taken place on 2nd of July. Right, this is a swing high resistance that took place in July. It is also accompanied by Fibonacci retracement at 78.6%. So it's trading close to a pretty strong resistance barrier, right? And we could see this currency pair stall around here and make a slight pullback. So we found this 78.6% Fibonacci retracement starting from this swing high on 1st of May, going down to the swing low here on 6th of September, right? We can see the 78.6% Fibonacci retracement aligns very well with the swing high resistance. And if I were to drag it all the way here till the 3rd of May, it also looks like a nice overlap resistance as well. Right, so dollar franc could potentially stall over here, stall around this region over the next few days, right? Even in early 2025, right? The first couple of trading days of 2025, it could stall around this level as well and make a small pullback towards the first support. First support is actually a nice overlap level. We see a nice swing high resistance taking place here on 14th of November. Then we see strong support taking place from 13th till 23rd of December. Of course, we see dollar franc spiking above this level here, but generally you can see this is a pretty decent overlap level at 89.04, which we can use, which we can identify as the first support. First resistance is another swing high that has taken place in 23rd of May, right? We see this earlier this year. Nice swing high resistance taking place here. So that's how the first resistance has been identified, and that's at 91.58. Right. Okay, so this is dollar franc. Let's see, we'll take a look at the euro as well, dollar yen, and then we'll move on over to the commodities. Right, taking a look at euro, we see that it shares a very similar market structure with the pound, with cable, right? Both these currency pairs continue to trade in a prolonged downtrend, and as well trading underneath a bearish Ichimoku cloud as well, right? And it has after dropping as low as 1.0330 on 19th of December, this currency pair has stabilized at around 1.0410, right? It's hovering around this level since then. Right, so the pivot is actually a nice pullback resistance that's at 1.0460. It's also accompanied by Fibonacci retracement at 38.2%. You can see here starting from this swing high on 6th of December, going down to this swing low on the 19th. We can see that the 38.2% retracement aligns very well with the pivot. Higher up, right, there's almost like a multi-swing high resistance here at 1.0598. Right, we can see the euro running the resistance here on 19th of November, resistance here on 29th of November, and again resistance on the 6th of December, right? Almost like a mini multi-swing high resistance here, right? And also we can probably run a couple of descending trend lines as well, right? There's one nice descending trend line that we can run from here, right? So we have okay, it looks like it has made a potential bullish breakout above this descending trend line. However, right, it still continues to trade underneath the pullback resistance, which is the pivot. So perhaps this could be a false breakout as well, but it's something to take note of for the euro. And then on a slightly higher time frame, if we take it from this swing high here on that occurred on September, right, there's another pretty decent descending trend line as well. Right, so you can see that this currency pair continues to trade underneath the red Ichimoku cloud, highlighting the ongoing bearish momentum. But of course, we can expect retracements to the upside as well. Right, just like here in the third week of November onwards, there's a nice retracement to the upside. This was almost like a nice bear flag. Right, if you look at it here, right, this is a pretty decent bear flag that occurred at the end of December, end of November, early December, and then there was a bearish break below this bear flag, and the euro dropped lower. Perhaps there's something similar that's being formed now as well, right? We see a pretty decent bear flag being formed in the current at the present moment in time, right? So this is something to take note of as well. This bear flag looks a little bit similar to what has happened at the end of November, early December, right? And if we do see a clean break below the flag, right, we can expect more overhead pressures to build for the euro here. But otherwise, these are the key support and resistance levels and the pivot for the euro on the daily time frame. Right, then we'll wrap things up by looking at dollar yen for the currencies, at least, unless of course there's any other requests. But otherwise, from here after dollar yen, we'll head on over to the commodities. Now looking at dollar yen as well, right, after dropping as low as 149.40 at the beginning of December, this currency pair has reversed strongly and has bounced nearly, let's see, 6.4% from trough to peak, right? In a matter of 3 to 4 weeks, 3.5 weeks, this currency pair has rallied very strongly, right? Gaining almost 940 pips in the process. Very strong bullish reversal here, right? And in this case, we also saw dollar yen stabilize at the top of the green Ichimoku cloud, right? Typically, when the cloud is green, it can function as an area of support, and at the same time, it actually it coincided with this overlap, almost like an overlap level here. If you look at this level at 149.27, this level previously functioned as a swing high resistance on 15th of August. After that, this level functioned as a sort of consolidation period here in mid-October, creating a pretty decent support level, which coincided with the green Ichimoku cloud, identifying a potential support zone. So we saw dollar yen stabilize at around 149.30 and make a very strong bullish reversal. And at the same time, this is also a nice uptrend that begins from this swing low on 16th of September, going up to the swing high here on 15th of November. When we look at all the fibs, we can see that this overlap level and Ichimoku cloud also sits just above the 50% Fibonacci retracement. Right, there are a few areas here that helped us identify a few indicators here that helped us identify a strong support zone. Right, we have this overlap level at 149.27. We have the green Ichimoku cloud, and we have the 50% Fibonacci retracement as well. As you can see, a pretty strong support zone where we did see dollar yen stabilize to stage a very strong bullish reversal. Now, after going past this swing high resistance here. Oops, there was a swing high resistance that was formed here on 15th of November when the bullish breakout took place on 19th of December. This swing high resistance then proceeded to function as a pullback support on 20th of December. So that's how the first support has been identified. First support at 156.24. It's a nice overlap level. Right, higher up, I see the dollar yen trading close to what I see is an almost like an overlap resistance. Right, we see a nice swing high resistance being formed here at the end of April. And we see a little bit of consolidation here, right, as it dropped strongly on Thursday and Friday, 11th and 12th of July. It managed to stabilize here for a while, creating some sort of overlap level here. And this is where dollar yen has stalled as of 20th of December, right? You can see here since 20th of December, dollar yen has stalled every time it has come close to this level here, indicating a lot of selling pressures at 158.28. So that's how the pivot has been identified. And of course, higher up, there's another pretty decent overlap resistance at around 160.78 around here, where we see a nice pullback here taking place on 8th of July and a little bit of resistance here on this little white candle here, 27th June. But of course, I think this could be more of a intermediate resistance level. I don't think this is going to be a very strong level here. The main resistance is going to be at this major swing that has taken place on 4th of July. But I would still keep this level here as a reminder that we could see some potential resistance at around this level, which is 160.78. Otherwise, the major resistance beyond the pivot is going to come in at 161.72, which has been identified as the first resistance. Right, so these are the key levels here for dollar yen. Right, and it's trading close to this overlap resistance, right, kind of similar to what we're seeing for dollar franc. So perhaps we can expect both of these currency pairs to make a small pullback over the next few trading days. Right, so that's we've covered most of the major currency pairs. Right, then let's move on over to the commodities and touch on gold and crude oil as well. Right, looking at gold, right, after making a very strong bullish run since 14th of February, and if you zoom out even more, since 3rd of October, right, since 3rd of October 2023, gold has been in a strong bullish uptrend all the way till this intraday all-time high that was formed on 31st of October 2024. Since then, gold has pulled back sharply, right? This pullback here from its all-time high was as much as just over 9%, right? Gold prices pulling back very sharply, falling almost 9%. And then since mid-November, it sort of just traded sideways within this channel here, right? You can see there's a nice sideways channel with gold prices hovering above $2,570 on the lower bound and running the resistance around $2,790 on the upper bound here. Right, so that also helps us to identify the first resistance and support. Right, first resistance is at $2,721 per ounce. This is a multi-swing high resistance, the first of which took place here on 22nd of November and the second taking place here on 11th of December. On the support side, we see a very strong swing low taking place here in mid-November, right? We can clearly see the market structure highlighting a very strong V-shaped swing low, and this is how the first support has been identified. There's also a swing low that has taken place here on Wednesday, 18th of December, right? As gold prices fell sharply from 12th of December, it managed to stabilize around this level here. Probably can identify this as an intermediate support, right? Maybe not the strongest level, right? But this could be a pretty decent area to watch out for as well. Pivot is an overlap resistance at 2,658, which is also accompanied by Fibonacci retracement at 50%. We found this retracement level by starting from here, this high on 12th of December, going down to the low here on the 18th of December. We can see that the overlap, we can see that 50% retracement aligns very well with this overlap here. And this is not the cleanest overlap, but you can see, right, we can see gold stabilizing here on 6th and 7th of November. After that, we see it being constrained underneath 2,658 at the end of this November, early December, creating a pretty decent overlap, right? This is not the cleanest overlap level, but this is where we can see, where I see gold prices being constrained as well, right? And since falling lower on 18 December, gold did retrace higher, but it has stalled at around 2,640. Right, so these are the key levels here for gold on a daily time frame, right? We can expect uh, like from last Friday, the downtrend since last Friday has continued, the downward momentum has continued. So we can probably expect this precious metal to slide lower over the next couple of trading days as well, right? And if this level holds, right, or rather if this level gives way at 2,583, right, this is not the strongest support. There's like an intermediate support level here. If this level gives way, we can definitely expect gold prices to drift lower towards the first major support, and that's at 2,561. Right, so these are the key levels for spot gold, right, on a daily time frame. Let's see if there's anything else to highlight. Probably not. All right, okay, with that, then let's move on over to crude oil. Right, XTI USD is an instrument that tracks the WTI crude oil futures. And we can see in the fourth quarter of 2024, right, crude prices have sort of volatility has sort of reduced quite significantly in the last quarter of this year, right? Especially if we compare to the first quarter, right? We saw this strong upward trend in the first quarter of 2024, right? With crude prices rising as much as 25%, right? Of course, while there's a strong pullback that had taken place here at the end of January, but otherwise it's a strong bullish move to the upside with crude prices gaining 25%. And then we saw prices reverse swiftly in the second quarter, right, giving up almost all of the gains with crude prices dropping nearly more than 17%, and then reversing sharply once more from June till early July, jumping 16.5%, and then reversing sharply once more, dropping in early July all the way till mid-September, dropping more than 22% again. So you could see the first 3 quarters of 2024 saw wild fluctuations and large movements in price of crude, right? But since the third quarter of this year, right, or the final quarter of this year, since the final quarter of this year, fluctuations have somewhat mellowed, and we can see volatility has reduced quite drastically as compared to the first 3 quarters of this year, right? You can see simply now the moves or the fluctuations are not as large as they used to be, right? For example, this swing low here that occurred in mid-November, right? This downward move here is only just 9%. And then this bullish bounce that occurred in the second week of December was only as large as 6.3%, right? So you can see here how the moves to the upside and downside have significantly reduced, right? Highlighting the drop in volatility. But of course, and also we can see that it's actually crude prices are now just trading sideways, right? Once I remove all these annotations, we can see that actually since the end of October, crude prices have just been trading sideways, finding support at around $67 per barrel on the lower end and running into resistance at around $73 or $72.80 on the upper end here, right? We are not seeing any clear bullish uptrend as what we saw in the first quarter of 2024, nor do we see the strong bearish downtrend in the second quarter, and so on and so forth, right? We are seeing price sort of consolidate within this range that is on $67 on the lower bound and at around $72.90 on the upper bound here. Right, we see crude prices rising up towards the pivot. The pivot has been identified as a multi-swing high resistance. Right, we see the first resistance being formed here, the swing high resistance being formed on the 25th of November, second swing high resistance being formed here on 13th of December, and with prices rising up towards this level once more, we can probably expect crude prices to stall around this level here, right? Unless, of course, geopolitical tensions in the Middle East suddenly escalate once more. But otherwise, crude prices could remain, could stall once again at this multi-swing high resistance, which is at $71.50. Right, at least for the next couple of trading days, right? We can probably expect crude prices to remain under this pivot here. And the first resistance is a nice overlap level at $72.73. Right, we see a nice swing low being formed here on 4th of June, another swing low being formed here on the 2nd of August, third swing low being formed here on 22nd of August, and then once the bearish breakout took place on 3rd of September. This level then proceeded to function as a nice swing high resistance on 24th of September. This then creates an overlap level, and we see crude prices bounce off these levels again, right, on 9th of October, and of course from 22nd till 8th of November as well. So you can see very clearly this is a very strong overlap level, which we have identified as the first resistance. Right, so these are the key levels here for XTI USD. Let's move on over to the indices, starting with US 30, right? US 30 is the instrument that tracks the Dow Jones futures. And after making its intraday all-time high on, I believe, which is the highest level, 103, yeah, this is the one here, on 4th of December. This is the intraday all-time high for Dow Jones. Since then, this index has dropped significantly, right? Dropping from peak to trough, almost 6.9%, right? This was how many days? 2, 4, 6, 8, 10, 11, yeah, almost 11 consecutive down days for the Dow Jones, right? I think this was a new record as well in terms of consecutive down days, and this index finally stabilized in the third week of December at around 42,334. So we can see here, first support has been identified at this swing low that has taken place last week. That's at 42,323. Pivot has been identified at 43,330. This is actually an overlap resistance. Previously, this level functioned as a swing high resist. Oh, hang on. This level functioned as a swing high resistance here on 21st of October. Then it proceeded to function as a swing low support on 19th of November. And as recently as last week, it ran into resistance once more. So very clearly highlighting a strong overlap resistance. That's accompanied by Fibonacci retracement at 38.2%. Higher up, first resistance at 44,374 is identified as the pullback resistance. Right, we can see Dow Jones running the resistance here on 12th of November, and this level is also accompanied by Fibonacci retracement at 78.6%. Right, let me see if there's any extensions that we can find. Right, to find an extension level, we're going to run a retracement from this swing low 19th of November going up to the intraday all-time high on 4th of December. Extension levels, key extension levels sit at 127 and 161%, and that's where we did see Dow Jones stabilize, right, at around the extension at 137%, and a little bit below we can see the extension at 161%, sitting pretty close to this a nice support level here at 41,786. All right, okay, then think we can probably run a retracement from this swing low on 4th of November going up to the intraday high. Let's see if the 70.6% retracement is something that we can use. Yes, I guess. Okay, it did sort of it does sit quite closely to where the extension at 127% sits, but we can see that this next few candles here from 18th and 20th of December have closed below the 78.6% retracement, so I'm not so inclined to use it. Let's see if we can run another retracement from this swing low, 11th of September, going up to the intraday high. Look at all the fibs. We can see 50% has already broken under. 61%, yeah, sort of sits close to where the bottom of this wick sits. Let's keep 61.8% here. Right, and we can see US 30 or Dow Jones dropping lower over the last couple of days as well, right? And it looks like to be sliding down towards the first support once more at 42,323. All right, so these are the key levels for US 30, right? This is the instrument that tracks the Dow Jones futures. All right, hi Karim. Okay, in terms of orders, right? I'll be looking, yes, you can use sell by limit order, right? Or you can use for me personally, I would wait to see a little reaction, right? Maybe on a 4-hour time frame or 1-hour time frame for price to reverse off a potential to reverse off the pivot or the support, and then place the order as well. Yes, you can. It's a combination of using buy and sell limit orders, and also at the same time just using trigger alerts to indicate when prices hit my level, and then I will just manually enter the trade once I see a nice reaction of that level on the H1 time frame or the 4-hour time frame. Right, let's move on over to DE40, right, which this is the instrument that tracks the DAX futures. Right, hi, all right, Karim, I hope that's answered your question. So once again, right, like I'll be looking for price to, I would either use a buy sell limit order with regards to the pivot or the first support or first resistance. Otherwise, I'll uh, indicate, I'll set up triggers, right, alerts rather, and then once prices hit that level, I will monitor the position and then use the H1 time frame or the H4 time frame to manually identify the buy and or sell entry. Right, coming back to the 40. Right, we can see here the 40 as well has dropped almost 4.4% from its intraday all-time high that was formed on 13th of December, and since then it has consolidated at around 19,900. Right, a pretty big drop for the 40 for the DAX over this 5 to 6 trading days. But this index is now stabilized over the last 2-3 trading days at around 19,912, and I think any any retracement to the upside is likely to be restricted at this pivot level 20,194. Right, on the daily time frame, this doesn't look like much, but when we go over to the 4-hour time frame, we can see that the pivot at 20,194 is actually a nice pullback resistance that is accompanied by Fibonacci retracement at 60%. So take note, on the daily time frame, the pivot doesn't look like much, but on the H4 time frame, we can see quite clearly that this is a nice pullback resistance level that is accompanied by Fibonacci retracement at 61.8%. Hi, hi, Goy Vagara. Yeah, I think no, I think the volume on my end is pretty clear, right? I think it's pretty clear. Maybe you should could you just adjust your speakers or your headphone settings, right? If you're using headphones or Bluetooth or your speaker, yeah, please kindly adjust it, because I think for the rest, audio doesn't seem to be an issue. All right, coming back to the 40, right? So I see a nice pullback resistance that's identified by the pivot. It's also accompanied by Fibonacci retracement at 61.8%. First resistance at 20,476, which is close to where the intraday all-time high was formed. And of course, the first support is actually a nice overlap level that's accompanied by 50% Fibonacci retracement. We can see here, this level at 19,664 previously functioned as a nice swing high resistance here on 21st of October, running through resistance once more here on 30th of October. And then once the bullish breakout took place on 2nd of December, this level proceeded to function as a nice swing low bounce on 20th of December. So this then creates a nice overlap support that we have identified as the first support, and it's also accompanied by a 50% Fibonacci retracement. This retracement level was found starting from this swing low on 19th of November, going up to the swing high to the 13th of December. Right, so we can see, just let me adjust the labeling so that the 50% retracement is a little bit more clearer. Right, so these are the key levels here for the DAX, right? And remember, with many financial markets closing early tomorrow or being completely closed, right, trading activity is definitely going to be muted, and trading volume is going to be thin. So we're probably not going to expect much movement over the next couple of days. Maybe once markets fully reopen on Thursday, 2nd of Jan, and 3rd of Jan, Friday, that's where we can probably see trading activity to pick up much more meaningfully. All right, then let's move on over to US 500. Right, after pulling back sharply from its intraday high, this was the latest intraday all-time high for US 500. That was 4th and 6th of December. This dropped nearly 5% from peak to trough, and then since 20th of December, US 500, which tracks the S&P 500 futures, reversed very sharply and made a very strong retracement before running the resistance at 6,041. Right, this level here previously was a nice pullback resistance level, which then created a nice overlap here. Right, we can see this level previously was a pretty decent support level here, and then resistance creating a nice overlap, which we have identified as the first resistance at 6041. This level here is also this overlap. Now, this level was previously identified as a pullback resistance, but after the swing high resistance or the swing high reversal took place here on 26th of December, this level is now an overlap resistance that's accompanied by Fibonacci retracement at 78.6%. Right, so we found this retracement by running from this swing high on 6th of December, going down to the swing low here on the 20th of December. Right, okay, then on the support, okay, on the pivot side, right, the pivot, since we saw US 500 stabilize at around 5,860 last week, we can see here this is actually a nice overlap level. We see resistance being formed here in mid-October. We see a nice swing low being formed here in mid-November, and another nice swing low being formed here in the third week of December. So this creates an overlap level which we can identify as the pivot. That's at 5,861. So this is a nice overlap support that's accompanied by Fibonacci retracement at 23.6%. Not only that, it's also accompanied by Fibonacci retracement at 61% as well. Let me just see if I can adjust the labeling to make it a little bit more clearer. There we go, right? So this is a Fibonacci confluence zone, right? Pretty strong Fibonacci confluence zone that's identified by 33.6% and 61.8% Fibonacci retracements. So the overlap support, which is the pivot. A little bit below, there's a nice multi-swing low support taking place here in early October, and then again in early November. Right, first support taking place here, second here, and it's also accompanied by Fibonacci retracement at 38.2%. So this retracement at 38.2% was found starting from this swing low here on 5th of August, going up to the intraday all-time high on 6th of December. We can see that the 38.2% retracement aligns pretty well with the first support, and there's another 61.8% retracement that was found starting from this swing low on 6th of September, going up to the intraday high, forming another Fibonacci confluence and around the first support here. And of course, at the same time, we can see that US 500 continues to trade above the green Ichimoku cloud, highlighting the ongoing bullish momentum. So we can see here there's a nice overlap support, the green Ichimoku cloud. Remember, the green Ichimoku cloud itself can function as an area of support, and we had the 23.6% retracement and 61.8% retracement identify a potential support area, which is where US 500 did stabilize on 19th of December, right? So we had, once again, to emphasize this strong support zone, we had the overlap level here at 5,861, where the green Ichimoku cloud, the Ichimoku cloud itself can sometimes function as an area of support, and at the same time we had two retracement levels, the 23.6% Fibonacci retracement and the 61.8% Fibonacci retracement, with 1, 2, 3, 4 factors highlighting a strong support zone here, which is at 5,860. Right, so these are the key levels here for US 500. Right, and then we can move on over. All right, if there's no other requests, right, we've covered most of the major currency pairs. We've covered the commodities such as crude oil and gold. We've also covered some of the indices. Right, if there are any other requests, I'll be more than happy to go through the analysis with you. Otherwise, we'll just cover crypto as well. Right, let's start with Bitcoin. So after making this intraday all-time high for Bitcoin here on 17th of December, hitting $108,391, we've seen Bitcoin pull back quite sharply, right? It had from peak to trough dropping almost 15%, right? It's quite a big drop in a matter of 3 to 4 trading days, and it's continues to remain restricted under 99,881. This level here has been identified as the pivot, which is actually a nice overlap resistance, right? We see pretty decent support being formed here on 12th of December, and then when the bearish breakout took place on 19th of December, this level then proceeded to function as resistance on over Christmas. So you can see this is a very nice overlap level at 99,881, which has been identified as the pivot. This level is also accompanied by Fibonacci retracement. Right, this is the, let me see if I can adjust the labeling to make it a bit more clearer. Right, it's a 50% retracement. Right, so this 50% retracement was found starting from this swing high on 17th of December, going down to this low on the 20th December. we can see that the 50% retracement aligns very well with the overlap resistance, which has been identified as the pivot. On the lower end, there's another nice overlap support at 91,855. We see a little bit of resistance here in mid-November. See a nice swing low bounce here on 26th of November, another bounce as well on 6th of December, and a couple more bounces here on 20th and 23rd of December. So this creates a very nice overlap level, which we have identified as the first support, and it is also accompanied by Fibonacci retracement at 38.2%. Right, this retracement level was found starting from this swing low on 4th of November, going up to the intraday high on 17th of December here. And at the same time, right, Bitcoin looks to have stabilized within the Ichimoku cloud as well. The green Ichimoku cloud can be a area of support. So we have three factors that have identified as a potential support zone. We have the 38.2% Fibonacci retracement. We have the overlap support at 91,855, and we have the green Ichimoku cloud itself functioning as a potential support zone. Right, three factors identifying a potential strong support zone for Bitcoin. Right, then let's move on over to Ethereum. Similar to Ethereum as well, right, after making this high here on 16th of December, this coin has dropped nearly 25% in a matter of like 4 or 5 trading days, about 5 trading days, right? It's a huge drop here for Ethereum. Take note, this is not the intraday all-time high for Ethereum. If you look at it on the weekly time frame, the all-time high for Ethereum was formed on 8th of November 2021, and that's at $4,865. So take note, although Ethereum is trading close to trading at elevated levels, it's not the intraday all-time high, and it's actually running the resistance at the previous swing high here that has taken place on 11th of March. Right, you can see here very nice swing high resistance here taking place on March 2024 on the weekly time frame. Even on the daily time frame, right, if you zoom out, right, we can see here this is where exactly Ethereum has stalled once again. Right, this is where I would identify the second resistance for Ethereum. Let's get rid of this marker as well. Right, so you can see second resistance at 4,089 is a multi-swing high resistance that's been in place since March of this year. Right, you can see here it failed at this resistance on 6th of December, dropped lower, reversed strongly once more, and failed for the second time on 16th of December again. So you can see here this level at 4,089 is indeed a very significant multi-swing high resistance barrier that's been in place, and the first resistance is actually a pullback resistance at 3,846, which is accompanied by Fibonacci retracement at 17.6%. This retracement level was found starting from this swing high on 16th of December, going down to the swing low here on the 20th. The pivot is also a nice overlap level. We look at it, this pivot is a nice overlap level because this previously was a nice swing high resistance on 22nd of July. Once the bullish breakout took place here on 27th November, this level proceeded to function as support, creating a nice overlap, and then proceeded to function as resistance at last week as well. So this creates a very nice overlap level, which we have identified as the pivot is actually an overlap resistance, and is also accompanied by Fibonacci retracement at 38.2%. And in terms of support, looking a little bit below, there's a pretty decent swing low support that has taken place on 22nd of December. Right, once again we see Ethereum find support close to the green Ichimoku cloud. Remember, when the cloud is green, it can function as an area of support as well, and it is also a level that's accompanied by Fibonacci retracement at 50%. This 50% retracement was found starting from this swing low on 4th of November, going up to this high here on the 16th of December. Right, so these are the key levels here for Ethereum, right? And it looks to have made a nice bounce off the first support and heading back towards the pivot, which is an overlap resistance. So perhaps it could stall around this level here over the next couple of trading days as well. All right, before we continue, I'm just going to launch a poll as well. Really appreciate it if you guys can give your feedback with regards to today's webinar, and then we'll continue with any other requests that you may have. All right. Okay, before we continue, right, just take note as well. It's a much shorter trading week, and with many financial markets being closed completely tomorrow or having an early close, right, it's going to be much muted trading activity and very thin volume as well, right? Banks in Germany, Switzerland, Italy are all going to be closed, Japan as well, South Korea, Brazil, and in markets such as Singapore, Taiwan, Singapore, Hong Kong, the UK, Australia, Spain, France, and New Zealand, they're all having early closes as well. So be mindful of a much quieter trading session over the next 12 hours or so. Right. If there's no further requests, right? If there's no further requests, then yeah, let's just do a quick recap before we wrap up today's session. All right, okay. So let's recap with the dollar index. Right, we can see dollar index is pulling back towards the pivot at 107.49. This has been identified as a pullback support. That's accompanied by a Fibonacci retracement at 13.2%. We can see that the dollar index has rebounded strongly since the end of September. Right, it has gained from trough to peak, gaining almost 8.4%. Right, huge move, gaining more than 830 pips over the process. And this pullback here could be an area where it could once again stabilize and resume the uptrend. And we can see that this index continues to trade above the green Ichimoku cloud, highlighting the ongoing bullish momentum. Like similarly for dollar franc and dollar yen, right? We've seen these two currency pairs reverse strongly as well from the end of September, right? Uh, and both of these respective currency pairs have stalled at their respective pivots, so we can probably expect them to pull back a little bit. However, this uptrend is pretty strong for both the dollar franc and dollar yen. We can probably expect this uptrend to continue in early 2025 as well, right? The first few trading days of 2025 could see dollar franc, dollar yen pull back a little bit and then stabilize to resume the uptrend. Right, hi Karim. All right, okay, we can definitely, I believe for 2025, we will definitely have an educational webinar on Ichimoku Cloud. Yep, we can definitely organize one and schedule it in perhaps as early as February, right? Yeah, definitely we can do that. Yep. Right, we'll definitely organize one in February. Right, and then looking at crude oil, right? Crude oil is sort of consolidating between $67 on the lower end and between $71.50 on upper bound since 25th of November and higher up at around $72.80 since 5th of November. Right, after experiencing large moves to the upside and downside in the first 3 quarters of this year, uh, price average true range, right, or price movements have been somewhat restricted or have been somewhat reduced in the last quarter of this year, right, especially with volatility dropping quite significantly, right? If you compare it to the first 3 quarters of this year, the swings to the upside and to the downside were pretty huge, as large as 25% to the upside, 20% to the downside. But since then, the moves have been much more subdued, and crude prices are consolidating within this sideways channel here. Gold as well, after making a very strong bullish uptrend throughout 2024, stalled at the end of October, right, making an intraday all-time high on 31st of October at $2,790 per ounce, and again since 22nd of November has been ranging sideways, trading between 2,560 on the lower end and around 2,710 on the upper bound as well. Right, hi Karim. Okay, for the live analysis, right, take note, we have two live analysis at the beginning of the week. We have a pre-market analysis that starts at on Sunday, every Sunday 9 p.m. GMT time. So take note, Pre-market, I'll just write this down. Pre-market is every Sunday 9 p.m. GMT, and then we have a live analysis at 9:30 a.m. GMT every Monday. Right now, hang on. And then we have educational topic as well. Topics every Tuesday, also at 9:30 a.m. GMT. Right, so these are the schedules here, right, for IC markets. So take note of this. As do head on over to the YouTube channel and sign up for the webinars as well. Right? I mean, sign up for the alerts. Okay. Trading on reports. Yes, in a way, yes. I do look at the EIA and API crude inventories because the inventory reports can help have also been a strong, pretty decent catalyst for price action as well, right? When you see the inventory levels increasing sharply or decreasing sharply as well, right? You can see the fluctuations in inventory levels, especially the EIA crude oil inventory levels, can have a near-term impact on crude oil prices as well. So do look out for those reports too. All right, okay. I think that brings us to the end of today's webinar, right? Thank you everyone for tuning in to today's session. I hope this has been a great webinar for all of you. I wish you all Happy New Year, and do remember to take some time off and have a great New Year's Eve celebrations with your friends and family. And looking forward to seeing all of you back in 2025, where we can kick off the brand new trading year. All right, and of course, do tune in for all upcoming webinars by IC Markets, and look forward to seeing you at the next webinar. All right, thanks everyone. Take care. Have a great trading week, and catch you all in the next session.